And I'll be free until the end. Crib outside the city, I don't feel safe in my hands. Took so many years, I'm just waiting for the wins. I'm in debt to no one but the one who took my sins. I do it for real, there's no reason to pretend. If I do it once, I do it again. Add it up, bankroll, euro, peso, add it up, I'm just doing me, everything is on me, oh you matter what, add it up.
Man, what it do? This is your boy back again with another episode. This is the Kikback, podcast. I appreciate everybody who has been liking, sharing, commenting on the show, man. This is another dope show that we're going to be having. We're going to be talking about financial gains, things you can do with your money. Everybody talk about getting that bag. Everybody talks about getting that bag, but how are you sustaining that bag? How are you keeping that bag for the long run? It's all about longevity. So I got a couple of smart brothers, intelligent brothers that are gonna help us decide on what we could do with our money. And also I want to appreciate a young entrepreneur, Pastor Palmer, with the Adult Time Drinks. He's actually sponsoring the show. He made this drink for me also. Very good. I think this is like $12. It's like a fish bowl, man. It's good. I'm telling you right now, I took one sip. I'm probably not gonna be drinking a lot of that, especially during the show. Y'all not finna have me slurring and all that. I called him before the show and I was like, bro, you're not finna have me slurring during my show. I'm probably gonna grasply sip that. But I'm finna introduce these young brothers that we have on the show, man. Like I said, this show is about like financial gains, financial independence, like what you can do smartly with your money. The government was giving out a lot of money and, a lot of people was just blowing it. I'm not telling people what they could do with their money, but these brothers here can help us decide smartly what we could do with our money. So what's going on, guys? What's up, Jason, Mr. Jason Bambi?
I'm blessed and highly favored, brother. Appreciate it. Appreciate being on here. And
I appreciate you. I appreciate Demareon. Demareon, have I been saying your name right?
No, it's Demareon. When I tell people, I say there's no air in my name, but no, you're good, bro. You're good.
Demareon. Oh man. Okay, Noah Allen. Hyped to see my man's Jason and Demareon.
What's going on, Noah?
Y'all know Noah?
Yeah, that's my boy.
Okay, hey, I appreciate you chiming in. Noah, where he from?
He's out here in Kentucky.
Okay, Kentucky, man. That's what I'm talking about, man. Kentucky representing. That's what's up.
Yes, sir.
Yes. Hold on, babe. Let me do the show. Hold on. That's my daughter. Like, man, if y'all haven't seen the show, like my daughter,
how you doing?
She waits till the show starts and then she comes holler at me, man. So, she's been absent a few shows, so I'm surprised she came on this one and stuff like that. But yeah, man. Like I was telling people, before I introduced y'all, a lot of people, we talk about getting money, we talk about getting that bag. But in the long run, it's like if we get something or if we sustain something, it's like, oh, okay, I can spend it, and most of the times it's not smartly. It's just like, let me just go blow it on this. Let me go blow it on that because I got it. But we don't think about the long run, man. Our people do not think about the long run. So, I want to bring y'all on to talk about things we can do with our money, man. Like, life insurance, retirement quotes, college savings for our kids, things of that aspect. And Slimy Boyd, man, appreciate you chiming into the show. Homeless emergency shelter. This not that type of show, but we gonna definitely touch base on that eventually, bro. You know what I'm saying? Because the homeless, that is important, taking care of people and helping them out. But this is about helping out your bank account, helping out yourself in the long run. So where do we start? Where do y'all want to start at, man? You want to start on life insurance or you want to start on retirement? Jason, what was the purpose you got into the career? Can you tell people what you are?
Yeah, basically, I'm a life insurance agent. I'm an entrepreneur. And here's the thing about it. You can be many different things. Okay. You could be a doctor, you could be an attorney, you could be all these things. But what is the most important aspect of being any of those things is the quality and character of the individual who you are and the things that you want to do within the lifespan that you have. Mm-hmm. And so if you're about change, if you're about building, if you're about growing, then 1000%, hey, I need to have a conversation with you. We need to be in the same mastermind group so we can focus on growing certain things. So what led me into this? Mm-hmm. A real quick story. Basically, I started out in my 20s doing real estate, and I got into that field. I loved it, but then, not to date myself too much, 2008 happened. Mm-hmm. Okay. 2008 happened, changed everything. I said, wow, I don't have, my money's not coming in the same way. I need to go back to school. Went back to school. I graduated doing physical therapy. Did physical therapy for 12 years. Mm-hmm. Okay, 12 years doing physical therapy. How you doing? She's such a sweetie. Did physical therapy for 12 years. And within that, I worked in a nursing home. And when you were working in a nursing home, you had conversations with people who are in their 80s and 70s. What I did not realize is that a lot of these individuals, and some of them, were in their 60s and 50s. And I'm like, what is going on here? And so I'm a very talkative person. I'm a very giving person. My mom was a CNA for over 12 years, 30 years. And so I was always compassionate about just getting to know people and learning a little bit about their past. And I would have conversations with these individuals and ask them, hey, what happened? Why are you in this situation? What happened? Aren't you supposed to be home right now? Mm-hmm. Aren't you supposed to be with your family right now? And what I realized, every single conversation that I had, I'd say about 90%, I wouldn't say every, but 90% of the conversation I had, it had to do with, well, I got sick and we didn't have the resources and this happened and that happened. And it always boiled down to money. If you trace it back, it always boiled down to a money issue. Mm-hmm. And I'm saying to myself, these are people who work for the city. These aren't people who didn't have a lot of money. These are people who had great jobs. And I'm like, they get into a situation whereby money was a problem. And I started to realize something. I started to realize I'm treating these people, but I'm treating the wrong thing. So when you don't have enough money, you live in areas where you might not go to the doctor as often. There's fried chicken places all over the place. You're not eating the right foods. You're not taking care of yourself properly. So what happens in our culture? Diabetes, high blood pressure, a mental illness, and you end up in a situation. Why? Because of lack of understanding what to properly do financially. Mm-hmm. So I looked at myself treating a secondary issue, which were all those diagnoses that were caused by a primary issue, which was the lack of financial education. And from that moment on, I said to myself, you know what? I need to know a little bit more about finance because I don't want to end up in this situation. And that's where my life story into learning a little more about finance actually started.
Yeah, I think our people don't think about the long run with finances. It's important. I don't think they think that far ahead. Mm-hmm. And I'm not trying to just throw that on there. I'm not trying to say everybody, but I'm just saying that, a lot of people don't think about their 60s, or even their 70s. They're just thinking about right now. And I always say that, like these homes and these nursing centers and stuff like that. I'm like you said, these people are young, well considered that young, 50s and 60s in these type of centers, and exactly right, because the stuff that we eat, and then you can't afford to go to that doctor, so you end up in those type of facilities and stuff like that. That's very important. A lot of people don't think about that at all. You know what I'm saying? It basically depends on like investing into the right thing, which I know that's what I have y'all here for, to help people out and, to educate people. Miguel Chavez said, good point. Get rid of fast food and liquor stores on people of color corners.
Hey, that has some type of effect for sure.
Yeah. Hey, Demareon, how did you get into the field? What made you get into this field?
So yeah, really, man, I just want to start off with some gratitude. Really appreciate you having both of us on to the the podcast and everything this evening. But my story was not as similar as Jason. So really, I'm a young entrepreneur. When people tell me like, who are you? I call myself like a creative storyteller, digital marketing specialist, a man of service. Really just someone that I'm big about impact. So for me, I was actually in my first or second or so year of college. Community college, I was double majoring in graphic design and software engineering. So I was looking to go down that route. For a while I thought, okay, it's school or nothing. Everyone in my family was like, I don't really know a single person in my family that has more than, I don't know, maybe a bachelor's degree. And that's maybe a small amount of people. So there's an element of, education there and different things along those lines. So for me, I was like, okay, how can I separate myself from everyone else in my family, but then do something that I can believe in? So I started building my digital marketing agency. To be honest, I was struggling. The first couple of months, I was struggling to build it, tried taking courses and everything online, made a bit of success in different areas, but I just started connecting with different people. I was kind of that young buck, on LinkedIn, on Instagram, on these different platforms, just trying to learn from everybody because I've always been a sponge. So with that, lady reached out to me online, by the name of, shout out to Greta Bermel. She reached out to me on LinkedIn. She was like, hey, I see that you're posting content. I see that, you're a young Black man in entrepreneurship. Let's have a conversation. We chopped it up over a Zoom call, got to know more, about the industry and everything. And I was like, hey, I love what you guys are doing. I need to know more about finance anyway. Mm-hmm. And I'm like, we don't even have these conversations at the dinner table. The reason we don't talk about money and business and finance and stocks and investing and everything is because like, there's not enough to talk about. So started gaining more information and everything about it. And I just, started running both my marketing agency and, my business and finance at the same token. So now it's to the point, like Jason here, this man's like a father figure and like a big brother to me. So it's a matter of, not just really the finance note, but my biggest message today is going to be about, who are you associating yourself with? Because there's a saying, it's like, you are the 6 of your top 5 associations. So if your top 5 people are lazy, if they're winners, if they're successful, if they're nobodies, if they're, plumbers, electricians, or, if they're nurses or doctors, often you will be the 6th person. So I was like, how can I position myself? Even though I'm the youngest person in the room, I want to be the dumbest person in the room. I want to learn from everyone else because like it's all upside from there. I'm 20 years old now. Building multiple businesses, have a passion in anime and manga, or in comic books and drawing and tech and all these other nerdier things. But how can I position myself in a way where I can gain information at a younger age and then create that impact that I'm about, for different people that look like us, and then stress that across the entire globe. So yeah, man.
dope man, and we've had numerous conversations, as far as like the environment we came from and the routes that we took, to find like a sort of success. And everybody's not going to have the same route to achieve their goal. But I just want to applaud you and Jason for coming on the show, man, because like I said, y'all are 2 brothers that have, defined the odds, and we're constantly, beating that stereotype in the head, man. Like I said, it's rare. I'm not gonna say it's rare, but as far as like 2 brothers as yourself coming on the show and talking about our finances and stuff like that, we don't have that too often. We don't see that in high school. They don't talk about that too often. And then when we get out of high school, we usually have to learn it the hard way. We usually got to learn it the hard way and got to fix it around. And then some people don't want to go through that effort and that drive to fix, maybe their credit and, medical bills and credit cards, stuff like that. So, man, like I said, man, I'm blessed to have y'all 2 on here. And let's talk about life insurance and stuff. A lot of people don't have that. You know what I'm saying? Out here in Texas, we like to drive certain cars, and we call it swangers. You know what I'm saying? They got candy paint on it, the long wheels, interior. These cars usually go up from like 15,000 to 20,000 or 30 or 40,000 people putting it into this car. And then I'm just using that for example, but sometimes if something happens, if life happens, then it'll be a certain person. They'll have to do a GoFund or something like that if something happens to them. And we're investing in a lot of money, and I'm just using that as an example. I'm not trying to get on that culture like that, nothing like that. But I'm just saying, a lot of times we invest our money in certain things that don't help us in the long run, you know? So as far as like life insurance, and a lot of people don't understand life insurance because there's different kind of quotes and things, you know. I think like the basic, I'm gonna say people think like as far as life insurance, you know, you pay something monthly, you die, and then your family, you know, your family gets that. But it's more detailed than that. So can y'all just, you know, piggyback on that as far as like life insurance and the quotes you can get and how you can actually help your family?
Yeah, 1,000%. So to get into life insurance, let's take a look back into history. You know, I'll tell you a quick story. I was having a conversation with this guy. He was probably like around 85 years of age, and we're talking about life insurance. And you know, I'm going through giving him a quote, and he said, "How much are they giving us now?" And I said, "Excuse me, what do you mean? How much are they giving us now?" Well, how much are they giving us? I was like, what do you mean by that? Well, back in the days, they only gave us Negroes only $50,000 worth of life insurance. And I said to myself, you've got to be kidding me. That took me back to the past. Like, I'm like, are you kidding me? Mm-hmm. So the reality is this, and you know, a lot of my older family members, they looked at life insurance as it's that thing. I don't trust it. I don't trust it. And so the connotation of life insurance kind of had like a negative view, just like marijuana. Okay?
Yeah.
I could go into the story of marijuana and cotton and how people wanted to push cotton because they invested heavily in cotton, but they had to give marijuana because it was cheaper to make and it was a better quality, a bad name. We could get into that. But the same kind of language was taken with life insurance. And so that produced the culture of thinking that life insurance is something that we shouldn't do. Okay. Demareon said something really important. He said, you know what, your associations are going to put you out as being that sixth person. If you're hanging out with five, you're going to be the sixth person. And if we only know a certain thing about life insurance, well, that only thing will transcend within our culture. Me getting into the life insurance industry blew my mind. Let's think about it. Your bank, where you're investing your money. I'm putting all my money in the bank. Why? Because it's safe, right? Mm-hmm. When you put your dollar into a bank, the bank can borrow up to 100 times that amount. Where are they investing your money? Well, there's something called the FDIC. Talk about insurance. Federal Deposit Insurance Corp. So you need to tell me the banks that I'm putting my money in is covered and protected by the insurance company. 1,000%. And where are the banks investing? You could actually go on the banks themselves and track where they're putting their money. What's their cost? What's their where they're putting their money on a yearly basis. And you will see that they invest more money, not in the stock market, but they invest more money into insurance. And you're like, why is that? Why? Because insurance is one of the most lucrative things that you could invest in. So what do we do now? What do? We say, you know what? Let's cut the middleman out and allow the individual to invest in insurance. And so people are perplexed because they say to themselves, well, insurance is just for when you die. But there's more than one type of insurance. Most people understand it's only term life insurance. The term is fine. Term is fine. Sometimes you need term. But there are other types of life insurances out there. I had a conversation. There's two types, right? So there's a term temporary, and then there's the permanent. The permanent, there's several types of permanent life insurance. Had a conversation with a young lady yesterday. She was a representative of ours, and she called me up and she said a young man in his 40s had a heart attack. All right, had a heart attack, and the policy lapsed in March. He had a heart attack this month. Now, terms are okay, but you want to make sure you have something in addition to that will last and be permanent. Okay, that's that aspect of it. Okay, the second aspect of it is you have different types of life insurance that you could actually utilize to invest your money in, right? Place your money in, and you will see it actually grow. And what you're saying is, how is it going to grow? Well, there's things called cash value, okay, and it's based off of a certain interest rate, okay, and your money will compound and compound year after year after year after year. You could actually take a type of life insurance and flip it into your personal quote unquote pension plan. How many people know about that? Not too many, because when they go to their job, they're introduced with what? They're introduced with a 401k and not an insurance product. Those are just the small parts of the life insurance and what it can actually do for you.
Jason, let me ask you something real quick. Crypto is the thing people like to invest in. So you're saying that people should look at investing into insurance also?
1,000%. But here's an even better way of thinking. There's a book, a phenomenal book I think every person should read. It's called The Secrets of a Millionaire Mind. Okay? Secrets of a Millionaire Mind. Phenomenal book by T. Harv Eker. Here's how you have to look at it. And here's how you have to look at it in an aspect of investing for the future. Me personally, man, let me tell you, Floyd, I will invest in some crypto like you wouldn't believe.
Yeah.
I'm investing in crypto. Anybody know about Dogecoin and Ethereum and all that? What? But here's the thing about it, is a balance to the game. I'm going to ask everybody here, and if you could post on the chat, how many bank accounts do you have? How many accounts in general do you have? How many accounts?
Me personally, just one.
Just one. Here's the thing about it. You need to have more than one account. You need to have at least between 5 to 6 accounts. Great book. Yes, phenomenal book. At least 5 to 6 accounts. But why is that? Why is that? Because the money that I'm trying to save is in the same place where I'm paying bills. The money that I'm trying to save is in the same place that I'm paying bills. If I could see my money, that means I have access to my money. Why? What if I had 2 separate accounts? See, we need to look at ourselves as business individuals, right? As a business. And so me being a business, I got to have a separate account, right? I got to also have an account where my bills are being paid, where my emergency account is set up, where my long-term account is set up for my retirement purposes, maybe possibility of a life insurance product, as well as my investment account, maybe some crypto. Maybe let me invest in something, a little riskier. And then I need to have a last account whereby I'm actually paying myself, whereby now I, the worker, I'm the person who's making the money, has to pay myself, the person who is working for the worker. You see what I'm saying?
I see.
So that if you have a business, you got employees. Why don't you be the business and you also be the employee?
True.
Now I'm paying myself a certain amount of money on a weekly basis, but guess what's taken care of? My bills are being taken care of because I'm putting a certain amount of money to pay my bills. Well, the amount of money that I need to pay my bills. A certain amount of money is going into my emergency account, and then a certain amount of money is going to my retirement account, and a certain amount of money is going into my crypto account or whatever investment you want to make. It is perfectly fine for you to invest in risky accounts as long as you got all your bases covered. But some people like sitting on chairs with only 3 legs. And then when things get rough, they end up falling on the face.
So that it really determines discipline also.
Oh, absolutely. 1,000%. 1,000%.
Yeah. I haven't never heard nobody say that as far as having multiple accounts like that, as far as, and paying yourself. That's very smart. That's very, that's going to stick with me. That's really going to stick with me, But yeah, Michael Sam said, I like Jason. He said, I like that, Jason.
I like you too, Sam. Appreciate the comment, brother.
Yeah, exactly. And a lot of we don't think like that, man. A lot of people don't think like that. As far as life insurance, like you said, you have the temporary, and it's different kind. So as far as let's say in general, let's just say if somebody wants to leave something for their family when they die. I think my mom actually did I don't know what it's called, but it's life insurance when you die. I guess funeral coverage or something like that, burial.
Final expenses, probably what it is.
Yeah, I think it's like maybe like $10,000-$15,000 or something like that or whatever. And that's what mostly people do as far as I guess for GoFunds to pay for like funeral costs and stuff like that. But well, go ahead, Demareon.
Yeah. So kind of to piggyback off of what both of you guys were talking about. I mean, I know you've mentioned like GoFundMe a couple different times. So the thing about life insurance is that it's not that thing that you get. It's no longer that thing that you get for when you die, but you can actually utilize it. Certain vehicles utilize it both as a retirement vehicle, but also like for coverage while you're still alive. Mm-hmm. So the thing about it, a lot of people are like, okay, let me start a GoFundMe. I mean, I think Floyd, you mentioned something earlier. You're like, a lot of people, they'll end up, spending money on J's, or they'll have, really flashy rims and everything, but they don't have anything when their time comes. Mm-hmm. So similar to what you said, like final expense can work as that vehicle for that inevitable, time that actually comes around. So the thing about it is like you can utilize life insurance where you don't need a GoFundMe, but it's a you fund you. Just like what Jason said, you can pay yourself checks while you're still alive for that inevitable day that is going to happen to all of us. So a lot of times people like what he said, and you'd be surprised. A lot of people, even people that have just like what she said, people need to get more life insurance to accumulate generational wealth. Exactly. That's the thing in our Black communities. It's a matter of, think about it. How many people do you know personally that make over six figures? How many people do you go ahead?
No, I was just going to answer that. I know a few people. I know a lot of people that don't, but I know a few people that do.
Right. And so there's a disparity between that. So it's a matter of like, okay, what if I became the sixth of that group of people, but then extended that information to those around me? Because a lot of times what happens is like, there's a lot of stigma around life insurance, around retirement, and then people, they don't have anything. So then that's why there will be people that, there'll be a lot of black on black violence that takes place, or there's a lot of just things that take place that we're not taking care of. And then when that day comes, then it's like, okay, now we got to rush and start a GoFundMe. Now we got to rush and, take away a payment on our home and everything, lose our properties and all these different things from all these different areas. When if you started, especially when you're at a younger age, like I know you mentioned that you wanted something even for, your daughter. Yeah. A lot of times if we had these conversations at the dinner table, hey, let's start now. I like when talking to people, I don't care if you're putting like $10 away in a simple policy. If it's something that you need, if it's something that's going to put you in the right direction, then that's what it's all about. Because I mean, that one person can turn to 3, can turn into 5, turn to 6, so on and so forth. And the more that we do this and have a focus of not, just going to go cop the newest pair of J's and go, get the shiniest rims, but let's, secure our lives so I can fund myself and I don't have to have other people, lose money to take care of, something that I could have set up when I was a lot younger.
What would you say as far as like a basic plan? If somebody if they weren't too sure about life insurance, if they didn't trust it, what would you say they should start off with? Something simple.
So go ahead, Jason.
I appreciate it. So like, first off, life insurance, it's not a religion. So you don't have to believe in it. You just have to know what it does for you.
Okay.
What it can do for you. Let me break down the basic differences of life insurance. As I mentioned before, you got your regular term life insurance. Mm-hmm. You have your permanent life insurance. Okay. The most important aspect of it, I don't care what you have, at least be covered. But be also covered with the right type of life insurance. So some life insurance, a very simple life insurance, is a term life insurance. Okay, what's the benefits of a term? It's not expensive. It's not expensive at all. Okay, it lasts anywhere 10, 15, 20, 30 years.
Mm-hmm.
And you will be covered for anywhere between whatever amount. I think every single person should at least be covered up to $1 million. You should have $1 million worth of coverage, no matter what, no question. So it's a very simple product. The positive is it's not expensive. The negative is it actually will expire at a certain time. Okay.
Mm-hmm.
Then you have other types of policies that are like what you called a GUL. This is a type of policy also with the term, there's no growth on it. Okay. The GUL is another type of life insurance, very simple type of life insurance, whereby you're putting your money into it. Okay. It's a little more expensive. However, let's say you were to get insurance on a car, and you had the car for 5 years, and the car company says, you know what, you didn't get an accident in 5 years. You get to get all your premiums back.
Mm-hmm.
Well, that doesn't exist with car insurance, but it does with this particular type of life insurance. At year 25, you get all your premiums back. So it's almost like you're renting insurance.
Yeah.
Some people will utilize that. For example, in what situation? I have a child. They're young. I just purchased a property. Well, my child is now 27. They're out of the house, but I have 25 years left on this property. Well, why don't I take the funds that I was funding this policy and get that money back and put it down on the rest of my mortgage and clear my mortgage? That's the way you can do that. The third type, which is what you call a LIRP, or life insurance retirement plan, is a type of insurance that you can start investing in. And like, let's say for your child, let's say you want your child to have a certain amount of income. So I did a policy for a young child. Both parents were putting in $100 each on this LIRP. And by the age of 27, they had a sizable amount of capital. Okay, they could have utilized that cash for whatever. If the child, and I designed it so the child will take it over and start paying an additional $100 till the age of like 65. By the age of 55, the child had close to $1.2 million. That is tax-free cash that is not affected by the markets. So in that type of account, you have all the benefits of the market without the downs of the market. And you call that an indexed type of life insurance product. Okay. And so there's many different types of life insurance out there, but you have to say to yourself, okay, what is right for me based off of my budget and based off of your financial needs. And so you'd have a professional sit down with you and go over what your financial needs are. Your financial needs might be, hey, right now, you don't have a lot of capital, but you have, so we can provide you a term. The beautiful thing about all of these things is the type of life insurance, which needs to have something called living insurance, or rather living benefits.
Mm-hmm.
And living benefits allows you to have access to a portion of your death benefit in the event you have a stroke, a heart attack, or any kind of other ailment. If you don't have this element, and this is the problem that I've seen a lot of people end up in that nursing home, where are you getting your capital?
Mm-hmm.
You're getting it from your 401k, from the investments in your bank account, or you're putting a lien on your house. I'll ask people, would you sell your house in order to save your life? And most of the times they say yes. What if you didn't have to, because you had living benefits in your life insurance and you were actually able to access the capital? That's how you use life insurance.
How much would these terms cost a person monthly, you would say?
Monthly, it's all based off of their age and their medical condition. This is why it's so important for you to get life insurance at a younger age as opposed to a later age, because the bottom line is you're going to pay for it eventually. And think about it like this. If I'm in my 20s and I want $500,000 worth of life insurance, and I'm like, okay, let me do that. I'm paying probably about maybe, I don't know, $20, $30 for that. $30. But if I wait until my 30s, I'm paying $120. Well, I could have had that since I was in my younger age, be protected throughout my entire time, and pay only $30. Now I'm paying $140, $50 for it. So you either pay for it later, or you see early, or you pay for it later. Either way, you're going to be paying for it. But what you don't want to pay for is not having it and end up in a situation that you can't get out of.
Yeah. So it's good for parents to put life insurance policy on their kids. Like for instance, my daughter, 5 years old. So it would be smart and wise for me to put life insurance on her right now for when she gets 20 and 30 and 40. She won't have to be. And can they take this over? Like the policy?
Oh, absolutely. Yeah, go ahead, Demareon.
Yeah, so and that's the great thing is I know you were curious about like college savings. That's the great thing. If you start off like young, you know, for your child's, you like by the time they turn 18, 20 or so, they can have the option to take out, you know, a loan on their policy and use that either to start a business, go to college, or just buy a house. You know, that's the great thing about life insurance is with having that living insurance, you have like options. I made a video just recently about it, and it's about, you know, about busy people. A lot of times people make the excuse like, oh, I'm too busy, I got so much going on, and then, you know, a year goes by, 3 years go by, 5 years go by, so on and so forth. And then they're like, oh, you know, I'm 45, I'm 50, I'm older. And then, you know, they start thinking about death. So then it's a matter of like, okay, what if you could kind of, I think someone was saying something about, you know, creating generational wealth. What if you could kind of stop this generational, like this multi-generational curse of poverty that exists in our communities? Mm-hmm. And the way you do that, and like the worst thing you could do is take information like on this podcast today and not do anything. So that's the thing, is it's about like starting, not making the excuse of waiting, but, you know, at least educating yourself about it, and then, you know, starting when someone's younger. So,
hey, Demareon and Jason, is it any way like after the show or I can tag y'all?
Absolutely.
And so as far as like people want to get in contact with you on policies, on anything it may be, or even just to have a general conversation so they can be more educated on the decisions that they might make, they can get with y'all. So I just want to throw that in there. Or y'all can send me like a link or email or whatever it may be.
Yeah, absolutely.
So people can, because I know we had this conversation. It's been a while since we had the conversation, but I just want to tell y'all too, it's never left. It never just left me as far as the conversation that we had that day. It's still important to me. And like I said, for like my daughter, like creating generational wealth, it's just about putting her at a starting point that's light years ahead of what my parents did to me. And my parents did a good job, but it's just, you know, we always, and I'm assuming that when she has kids, she wants to put her kids at a starting point ahead of her. So that's just what I want to do. And a lot of people, you know, that's why we have this show. So we can put our kids at a great fair advantage, and we can like kill a lot of generational wealth, because to be honest with you, we get our parents die or we die, and then we leave our kids with really basically nothing, maybe bills, you know what I'm saying? So let's like you said, with college savings, how can somebody go about as far as college savings with for their kids and stuff like that?
Yeah, so I mean, you could basically start like even before your child is, like when your child is born, you could actually start a policy for your child. The misnomer is, okay, this is just something that I'm going to utilize, and I don't want to get life insurance for my child, God forbid. No, you're not utilizing the life insurance, God forbid. But if God forbid something happens, of course you have that life insurance. The reasons why you want to utilize it is the same reasons why a lot of people who have that generational wealth will have a life insurance on their child because of how it works. Okay, so let's think about it. Most people, if you're investing into the stock market, if you're investing in the stock market, what's the woes of the stock market? Well, the stock market is a variable account, which means what? Fickle, unreliable. Mm-hmm. So I can make a lot of money, but I could also lose money. Okay, let's say I make a lot of money. I make $100,000 and I started with 50. Well, how much money do I have to pay on taxes? I got to pay about 30% of that $100,000 worth of growth.
Mm-hmm.
Well, let's say I have what's called a LIRP or a life insurance retirement plan that I set up for my child. Well, guess what's going to happen is it's going to grow in an index pattern. As I stated before, you're going to have all the ups of the market without the downs of the market. Okay. The second component, when my child turns 55 and there's a $1.2 million, how much taxes do I have to pay? Zero.
Mm-hmm.
Zero.
Neela was like,
what type of insurance to use, say, for our kids' college? So yeah, as I mentioned, so it's the tag name of it is a LIRP, LIRP, Life Insurance Retirement Plan. Okay, and there's different types of companies. So we work with over 30 different companies. So different companies will give you a different interest rate on that product. Okay, you have some that'll give you 5, some that'll give you 6, some will give you 7. So identifying which is going to be the best plan for your child would have to be going through each and every single one of the companies that we know is specific for giving good rates for children and provide that information. But in regards to the young lady who was talking about generational wealth, I mean, my parents came from Trinidad and Tobago, just like you saying. They knew what they knew. My mom came here with $500 in her pocket. They taught me what? Go to school, get a good education, get a good job with good benefits. But that doesn't work anymore because you have people that are graduating college and can't even find a job that they graduated college with, and so they got to do something else.
Yeah.
You have people who are working overtime, and that's normal. That's normal. Like, we got to stop that. But we stop it. Hey, I'm first generation here. I got to teach my kids the right way. And then my kids will already know it. That's how we give a head start, by providing that information and education.
Yeah, I like what you said about with the overtime and stuff, because some jobs they'll be like, hey, you want overtime? Like we jump on it. Like you say, oh yeah, I want overtime. And even though that money might be good, I'm the type of person, I like family. You know, if I'm not that greedy where I'm just jumping on overtime like that. You know, even though the money's good, I'd rather spend time with my family. I know, like, some people be like, oh, you got to go get that money, but like you said, what I'm saying, we go on what we're taught or whatever. So I think, like, with alert, because I even talked to you about a alert when we had that conversation. And you said it just depends on, like, the individual company that you deal with, on as far as like the LIRP and so you're saying, and also as far as alert, when they get a certain age, they can take out of it.
Correct. Well, here's the beautiful thing about it is you own it. So let's say your child grows up and they acting up. Yeah. You could be like, hey, I own that, so I could do what I want with the money. Okay. Yeah. You can continue letting it grow and have access to that capital.
Yeah.
Or they get to that age where, and how you want to design it is, you want to design it where you're putting money into it. And exactly, 1,000%. You're putting money into it, and they reach a certain age where you say, okay, they're 27 and they're working. So now you could take over this policy. Take over the policy. I did it for a young lady in Jersey, 4 kids, putting away a certain amount of money. So when they reach a certain age, they take that money over. Each one of those children at the age of 50 will have well over $600,000-$700,000 of capital. What is that in addition to? Most people, what they have is what? When they get a job, they get a 401k. That's it.
Yeah, that's it.
That's it. Most people don't know the 401k was designed in the 70s to supplement. It's a supplement retirement for what? Pension plans and Social Security. But what don't we have now? Pension plans, because you could hardly even find a company with a pension plan unless you're working for a big company. And what are pension plans? Pension plans are annuities that can be taken away at any time.
Yep.
Let's look at Detroit. People's pension plans were gone.
Yep.
Okay, I want to just say something from that. Exactly, Floyd. Yes, at 1,000%, 1,000%. You can't get that time back.
Mm-hmm.
In time is life. I want to get to that comment that gentleman said about homeless energy shelters for the community. You know what? Why don't we start those? Why don't we start them? Why don't we invest in certain things like that? Okay, but it starts with a certain amount of capital, and it starts with the community. It starts with each and every single person saying, okay, this is something that we want to do. This is something we want to build. Let's make it happen. But let's talk. Let's turn and flip it on the side and say, hey, how about we really truly understand how money works, so we could actually apply the knowledge to the dreams and goals that we have, and have them come to realization.
Yeah,
to kind of piggyback off that, my apologies, Floyd, but to kind of piggyback off of that, I think that's the biggest thing, man. It's about like, what are we doing in the household? I feel like a lot of our, and Jason mentioned earlier, a lot of our problems, money isn't everything, but a lot of our problems stem from like a foundation of finance. Because if you think about it, what would happen? Like, let's just imagine for a moment, what would happen if 80% of the brothers and sisters that we had in our communities had at least $500,000 in a life insurance policy? What do you think that would do? We wouldn't be shooting each other as much because like we would all have money. What would that do for the next generation? We'd be able to open up more businesses in our communities. We'd be able to, fund more like larger projects like building a shelter and different things in our communities. We'd bring more infrastructure to bring more people into the hood, into the hoods, and like take it where it's not hoods anymore, but just where they're cities. Where, the public schools, all these different things. If you look at every single aspect of our community, it all comes down to finance. So imagine if we started in the household, like parents especially, if we were like, hey, let's talk to our kids, let's get them some type of policy, whatever it is, but design it in a way where by the time they turn a certain age, that's going to roll over into the next generation, and then that's how we stop these multi-generational curses. The way that we stop them is by taking action. So that's
And one thing that I'm grasping from this conversation is when people think about these policies, they don't think about ending generational curses. I never really thought about life insurance and LERPs ending, or creating generational wealth like that. I think a lot of people think it's, you just save a lot of money and try to, like you said, work overtime and bust your butt. And then if some unforsaken happens, then you can leave your kids or something with a little amount of money or something like that. But we don't think about LERPs and insurance policies to help do these type of things. And if we start now, like how my daughter is at 5 years old, and like you said, how the young lady in Jersey or something, where the kids are left with $600,000 by the time they hit like 40 or 50, man. And I mean, it just helps a lot. And like you said, as far as crime and stuff like that, most of the time crimes are committed because people are they don't have things, so they're out robbing stores and they're all doing that. But if you have money and if you're ending creating generational wealth, that person doesn't have to go rob a convenience store or a guy walking out of the mall or something like that. It just, it gets rid of a lot of problems that are created in a community because, it's a lot of poverty and people are just trying to eat. That's what I'm grasping from this conversation is, and we don't, I never thought about that, she's been playing all day, but that's the main thing that I'm grabbing from this conversation is that life insurance and savings and stuff like that can help create generational wealth for your kids and more to come, and it can end a lot of a lot of problems in our community.
For sure. You can even think of like Nipsey. He said in one of his songs, he said, $1 million life insurance on my flesh.
Mm-hmm.
So if we had more leading figures in our communities, and regardless of your age, like I'm 20 years old, but like Jason and I, we sat down with one of my professors at the college, I thought, he's good. He's safe. He's secure. He's a cool guy and everything, older brother and everything. So we sat down, we had a conversation, just, drew a couple of illustrations, a few simple different things, found out he was close to $1 million in the hole of what he should get. Yeah, in the hole of what he should be at for retirement, meaning that he was $900,000 short of what he should be at.
Wow. So
at that point, it was a matter of like, okay, he's old. He's an older guy. He's rolling around retirement age. So it's a matter of like, okay, we put some things into place. It was a fit. It was a fit for him. But then we found out, okay, let's see what can we do for your wife? What can we do for some of your kids? So now we walked away from that conversation, which is a few different simple illustrations. And now I know that if he passes away like tonight, mid conversation, I'll be able to deliver that death claim to his child for several $100,000s. Yeah. And that's a big reason why I'm so big about impact. And that's why I was really started getting involved in finance. I was like, okay, what can I, and kind of something I want to say to a lot of people is like, find a way where you can be of service to people, even if it's not service-based business, even if you're just selling products, but find a way to teach yourself a high paying value-based skill, even if it's a trade, or even if you want to go to school or you want to start a business, whatever it may be, find a way to be of service to other people around you, because then that's going to roll over. That's going to help someone else out. So now I know, like, okay, I literally just created a legacy for himself, his wife, and 2 of his kids.
Let me ask you this.
Go ahead.
Not to cut you off on this alert. Okay, let's just say the rate that they give you, let's just say it's a certain amount of money. If you put more money into it, does that benefit? Is that a benefit for it, or it doesn't really affect anything? Or do you need to just go on like your policy rate or what you've been given?
Talking about max funding. Yeah. Go ahead.
Yeah. You definitely any addition to will go towards the cash value aspect of it. So a LERP is designed to give you coverage. Okay. A portion of it is for the coverage, which allows for tax-free growth. Okay, under the tax code 7702, allows for tax-free growth. So that's why you want to have that. So a small amount of death benefit to allow your money to grow significantly tax-free. The other portion is the cash value that's going to grow in an indexed rate. Now you're hearing it's a little complex, but index. You hear of index, the S&P 500 index. When it's indexes in an insurance product, it works very differently. An index in an S&P 500, you could make money, you could also lose. With an index within a life insurance product, you make money, you don't lose. So if you have $100 and you would add an additional $50 to that, then the $50 will go towards the cash value side and allow that money to grow. And it's flexible. So if, let's say you're putting $100 in and you had a rough month. Well, I could only put in $50. Well, then just put in $50. But every policy is going to design specifically to the individual, of course. And that's how that's set up.
Let me ask you a question. Let me ask like a troubleshooting type question.
Yeah.
Okay, so I have a LERP on my daughter. Okay. I'm just saying, what if I wanted to just put a LERP on my daughter and put as much as I can, monthly, and not have to put insurance on myself?
You could definitely do that. That's not a problem.
It's basically, to me, I could be wrong. It's basically, I'm basically taking care of her. It's the same way, isn't it? If I just have a LERP on her and I'm putting all this money in her LERP account and insurance and stuff like that, and if something happens to me, she can take over the LERP, right, and still have like a nice base or something like that coverage.
Absolutely, I've done that for individuals as well. The bottom line is the owner of the policy has full access to the capital, to the growth within that policy. So if that's something that you want to do, 1,000%. Okay.
Yeah.
Absolutely.
It kind of hit me because, to be honest with you, as far as when I think about things, it's all about her. It's all about her. So
right.
I'm just thinking like on a non-selfish type of thing, as far as putting like a policy on myself. I want it to be all about her. So I was just saying, like, what if I just created a LERP and then just whatever rate they gave me, and I just keep putting in to benefit her, because if something happens to me, she could just still take over her LERP and still do whatever she wants to with it. I was just troubleshooting on the spin. I didn't mean to.
Not at all. Not at all.
Go off the road or something like that.
Here's what you want to identify, though. You want to be able to identify. Is that baby? I love it.
Be gone.
And I love the fact that the other young lady, her child is going for public policy. Love it. That we need more of that. So I applaud.
That's my first time hearing that as far as public policy. I'm not too sure the definition of that as far as the degree in it, but I think it's pretty dope. I have a niece going to school. I think she's going for RN, but I was just thinking of different avenues she might can go into, what I'm saying, to impact the community. And when she said that, I was like, after this show, I'm finna go in and like Google it and see like that, and try to push something in my niece's ear and say, have you heard about this or whatever? Because it's just it's the norm as far as like when a female or a lady goes to college, it's usually, I'm not saying it's usually nursing, but the safe thing is like nursing, and then she might want to be a nurse practitioner. I don't know. I'm not trying to kill her, something like that. But I'm just saying, as far as what we're talking about, you can help a lot of people, man, because a lot of people, we don't have these conversations like that.
Yeah, absolutely.
And that's the great thing about life. Sorry, Jason, but that's the great thing about life insurance is like you have options. Like you can kind of treat life insurance like in a way almost infinite Play-Doh. You can mold it to take care of your certain needs, like that's going to be able to provide you joy, but also like take care of you in different situations. So I mean, I can tell like Floyd that you like your daughter is like number one on your list of everything, and I love that. But the thing is, it's a matter of like, okay, how can I take care of her? And that's really what I wanted to express on the conversation was like, if each of us kind of thought about it, we can do our part towards an ultimate goal of impact in our communities. Like if like I said earlier, if each of us did something it took a step in the right direction, we can ultimately impact like everything. Like what if 10 people started learning more about finance? And what if like 5 people were like, okay, I'm going to get something for myself? And what if at least one person was like, okay, I'm going to start facilitating this process for my community? That's going to roll over. That's what it's all about.
Yeah. Mm-hmm. Yeah. Absolutely.
And what I have came to find out is like it's a lot of more people that want to help the community and provide for the community, but they don't know the avenues to take. Like you said, with the guy that wanted to create the homeless, a center for the homeless. I talked to him before. He's passionate about that, but the only problem is that I'm not going to say he doesn't know how to go about it. It's we. I mean, he asked me the question, how can I go about establishing something? I don't know myself. I didn't know myself as far as how to establish that and go about the ways of doing that. And as far as financing and all that, it's just something that's not talked about in our homes and stuff like that.
Yeah.
It's really, we don't have those conversations.
No, we don't. So, we don't. I was listening to a podcast and they were talking about how Jewish people are financially one of the most savviest groups of individuals. Mm-hmm. And I could say, I agree. And in getting to learn a little bit more, like in depth of what the gentleman was stating, basically the reasons why is because everything is community based. Everything is, hey, my brother is a carpenter. Awesome. My cousin is builds property. Beautiful. Well, hey, my other niece is an electrician. Awesome. Well, they all work because they all communicate with one another. Mm-hmm. And if we could increase more communication, more platforms like this, so we could communicate and say, hey, well, this person works for the city who has a connection with somebody who works with the mayor who knows how to open up homeless shelters. Well, okay, let's bring that individual together so that they could actually have a conversation. And so we're in the process of doing that. We're in the process of moving towards that, but we just need more of that. We just need more of it. And more of it has to happen within our communities.
Yeah, exactly. And our people, we have those connections that we just don't put together. Like you said, like the Jewish community. You might have a brother that's like a carpenter, and you might have your cousin that owns a lot of real estate properties, and you might have somebody that does this and that. But the problem is we don't come together. It's like other, like the Jews or the Asians and something like that, and network off each other's abilities that we have. You know what I'm saying? Actually, just thinking about it right now, maybe I need to have that conversation with my family and my cousins, and and be like, look, y'all, I mean, you could do this, you could do that. Maybe we need to go ahead and finally, create this entity where we can, or create generational wealth for our kids if we come together for a common goal or wherever it may be. And and just we just don't have those type of conversations. I'm not even gonna lie to you.
Yeah.
And just having this conversation with y'all it's just right now, it's just it's telling me that I need to get with my brothers and my sisters and my cousins, and we could come together for like a common goal to create more generational wealth. And I like the way you was talking about with insurance, investing in insurance. I never thought about that. The wave right now is crypto, which I got crypto, my dad had, everybody has crypto. But like you said, these banks and what they're investing into, and they're investing into insurance, and that's crazy. That's like, okay, all right, that's something that I'm going to definitely do some research on as far as like investing in, because like I said, the wave right now is crypto.
Yeah, absolutely. But let me state this: life insurance, a life insurance policy, it's creating your own bank. You could literally create, quote unquote, your own bank with life insurance. So yes, I like real estate. I like crypto. When I make the money, where am I putting it? What if I put my money into a life insurance product, right? And what if I did what's called a max funded life insurance product? That's another type of product where I could put like $100,000 into a life insurance product for a period of time. And what if now it's at a certain interest rate, but I could borrow off of that? So I have $100,000 in there. I could take out $20,000, buy some crypto, make money, put the difference, the $20,000 back into the life insurance product, and continue to make that interest rate on the policy. That's power. That's power with utilizing life insurance.
Dang.
In our community, talking about getting life insurance is a taboo. I've heard people say, if I get it, something will happen, and that's a sad. I wouldn't say it's a sad thing, but it's a with every type of disease, there needs to be a cure from that. That language is like a disease. And the only way you can cure it is by properly educating people and understanding what life insurance is. Don't utilize it for what you think it is. Utilize it for what it does. Utilize it for what it does. What it does, it allows my money to grow tax-free. It allows for me to have continued generational wealth. I could actually have a life insurance and allow it to grow to millions of dollars. Then I could put it into the funds into a trust fund, whereby this policy is there's this thing called a dynasty trust, whereby generation after generation I will be paying, providing a certain amount of money to each and every single generation after I've left. So if I have $1 million, say, hey, this generation gets $500,000. The growth after that generation, it'll come right back up to $1 million. This next generation will get $500,000. You could have that forever. You literally can't. Most people don't think about it. One other thing I would love to say as well is identifying how much money you're going to need. And here's the reasons why a lot of young people don't like to invest. I had a conversation with a young lady. She was like, "Oh, I don't want to invest too much money right now." Well, that's fine.
Mm-hmm.
That just means you're not going to have a lot of money in the future. I'm West Indian, so I like my rice. I like my rice. But if I only put a half a cup of rice into a pot, well, how long am I going to be able to eat that rice for?
Mm-hmm.
I might have to ration it throughout that week just to make it last. Well, what do you think is going to happen if I only put a little bit of money away? Well, then I'm 65, and what? Now I don't have enough capital, so now I got to ration things. Now I got to reduce the size of property that I live in. Now I can't go on vacations that I used to go on. Now I got to dress differently. But we're so focused on saying, oh, we got this money. If I invest this, I won't have enough money to buy that Louis bag or buy them Timbs that I want to get. Is Tim still popular? I don't know.
I think Tim. You in Brooklyn? I know Tim's still popping out there.
He's a little to kind of echo his point. A lot of it is like kind of what Judy was saying. It's like there's a stigma and everything around it. So, but what if there's a stigma about what if I do it? What if you don't?
Mm-hmm.
What do you have? Like we've mentioned GoFundMe several times. Like, all right, you'll set up a fish fry GoFundMe. I've been to several myself. Like, what if you don't have it? Then what? Are you willing to endure the burden of the burden of not having something, or are you willing to go through the process of at least having something? Because what's the old saying? It's like you better have it and not need it than need it and not have it.
Mm-hmm.
So why not at least do something and take a step in the right direction? Because if people started thinking about I am we, similar with within our company, it's a matter of like, all of us, if we all elevate together, if each of us think of ourselves like, all right, I am the centrifuge of other people. I am a community myself. So if I improve my life, I'm going to help out everyone else around me. It's like when a new home is put into a community, right? Mm-hmm. That increases the value of the other neighboring homes. If we started looking at ourselves as we aren't property per se, but we are units that increase the value of a certain area. So if we increased our life, you're going to increase the lives of everyone else around you.
Mm-hmm. Yeah, I always said that. Like, if you take care of yourself, if you try to improve yourself as a person, then you improve the quality of your kids and stuff like. For instance, like me, I was working at a particular company or whatever 4 or 5 years ago. And I wanted better things for my family, so I understood what that took. I had to go. Me personally, they have other avenues people could have took. I had to go back to school. I had to go get a degree, and I was able to do that for my family. Now, as far as what we were talking about with insurance-wise and purposes and LERPs and all that, now that I'm seeing that I could actually do more in the long run. For my daughter, because like let's just say like with alert, if I pass it on to her, she doesn't have to necessarily use that alert, so she could continue on the policy, and let's just say she don't use it, she could pass it on to my grandkids or something like that.
Yeah, absolutely.
And you keep it in rotation, but you're only going to have some type of rotation if you start.
Yeah, she'll just open up alert on her kids and then just keep that going, and that's crazy.
Yeah. Yeah, it's definitely doable. You got to identify, and this is for everybody listening here, identify what you're going to need when you get older. And the blessing that a lot of young people have is they have time. They have time. Mm-hmm. And the older you get, the harder it is to save. If you're in your 20s, you want to become a millionaire when you get older, you can do that. Okay, take a portion of that money, do your risky stuff, and that's another thing. I want to make a lot of money, but be responsible. If God forbid you don't, if you're walking on that tightrope of risk, and God forbid you fall, and you don't have a safety net, then what's your recourse from that? Okay, so when I say identify what you need, identify how much money am I going to need when I have the option of working or not working. And so let's do the math real quick. If you're used to making $50,000 on a yearly basis, and you want to retire making the same amount, and you want to retire at 55, well, your life expectancy is probably until year 85, right? So you got 30 years to prepare and solve for. So 50,000. Well, the first 10 years, you're gonna need $500,000. The second 10 years, you need another $500,000. And the third 10 years, you're gonna need another $500,000. So you're gonna need $1.5 million. And then ask yourself the question here, am I doing what I need to be doing in order to have that type of capital? There's one number that I'm not even explaining, and that's inflation.
Mm-hmm.
Remember that apartment you used to rent 10 years ago? It was $1,000. Now it's like $2,100.
Mm-hmm.
With a bag of cookies. I love Oreo cookies. But I remember in the pack I had the same size pack. I had 10 cookies in there. Now I only got 7 cookies. What's going on? That's that inflation. And so what's going to happen 30 years from now? That 1.5 million is going to look more like 700,000. So you got to take that 1.5 and at least double it to live on $50,000 when you plan on retiring for the rest of your life. If that's not the case, look at your 401k and look at it really deep and hard and see, hey, is this going to get me to what I need in order to live a great life?
Yeah, we was talking about that at my job as far as like the 401k and the retirement, and they was saying what you was gonna basically be living on, and a lot of guys wasn't too happy. We was just having a conversation with my knife crew was cabin, and they wasn't too happy on what they was gonna be living on afterwards. When I thought about it, I was like, well, it ain't too bad, you know. It's a lot more than what people are getting paid now, but what they was just thinking of was like they didn't like it, and I don't know what policies they had. I don't know as far as insurance policies and stuff like that. Maybe they didn't have none. Maybe they weren't educated on it enough. But to avoid situations like that, as far as when retirement and basically living off of that, it's conversations that we need to have as far as like our people or with our family, because it's not. I don't think people take it important enough, to be honest with you. And we see, like you say, with the Jewish community, having those type of conversations, and it's becoming like a stereotype as far as like, oh, the Jews, they know how to handle their money. Well, why do they know how to handle their money like that? You know, I don't think anybody ever asked that question. How did they get to the point where we're looking at them saying, wow, they really know how to take care of their money? You know, nobody asked that question. But I guess I'm assuming they have those type of conversations with their family and whoever else they might be involved with. It's definitely conversations that I want to have with my family. This is the type of show that I will go back and watch it again just to understand more. And I talk to Jason. This is my second time talking to you. Demareon, we talk a lot, and I learn from you each and every time we have a conversation. I don't know how you go live, but and I know you're busy. So when I talk to you, like when I hit you up earlier today, like, hey bro, are you busy or whatever, and you responded right away. Can people have is there any way people can have those type of conversations with y'all? They can hit y'all, or you know, and just have that conversation or that educational talk.
1,000%, and that's what it is. And what we do, it's a matter of, like, I can't speak for everybody that does life insurance that you know, like runs a business, but the biggest thing for both Jason and myself, we're big about generally building a relationship with whoever we're sitting down having a conversation with. Because a lot of people, they're like, okay, I'm just going to throw somebody in some quick policy and then make a commission. That's not what it's about. We're all humans. If we just be human about our conversation, about our interactions, that's how we impact lives and change our community. So, I mean, I think Jason put his socials and everything on there. We can definitely like link our stuff. But it's just a matter of, like, you know, we'll have a conversation. So, you know, say we speak with someone tonight. We'll have a conversation, see what situation you're at. We'll find out, like, what do you need? What do you currently have? And, like, what do you want for yourself and your family? And then we'll find the best fit and see if we can, you know, we'll see how we can make that happen.
Yeah, man. I know we've been on the show for like an hour and 15 minutes. And like I said, man, I didn't want to hold y'all up too long. But and I say that to everybody, but the conversations be so dope and stuff like that. And when I do podcasts, like I like having a conversation, but I love learning. I love learning about stuff, learning about the individual, what they do, and how to incorporate that into my life, and to learn from that, man. And this was a dope conversation, man. Like I like having conversations about this because I think a lot of our people they're missing out on it, man. We're chasing the bag, but we're chasing it the wrong way. We're chasing the bag by going to work every day and going get overtime and doing that and just working our butts off and just saving it into a bank account and not really investing or putting money into these insurance companies. I mean, not companies, but policies that can help us create generational wealth. We're just going to work and stuff like that. And we don't have these type of conversations where, hey, it's better ways. It's smarter ways to get a bag other than just going to work. You know, it's just saving that check that you're giving into a bank account and then spending it. And then you're starting over from, you know, whatever, the ground up because you took a vacation or something like that. But this is definitely needed. I'm going to try to get to where we can kind of have these conversations like often. I know y'all guys are busy. So if I can like bug y'all, like maybe like once every other month or something like that, or something like that, and we could just tap in and reiterate on conversations like this. For sure. Because I think it's important, man. It's something we don't have. We don't have conversations like this.
Yeah. 1,000%. I agree. And you made a great point there that we're constantly looking to work for the bag. It's and just similar, just to reiterate what Demareon was saying. When we sit down with somebody, it is that relationship. It's building that relationship. So I will go to schools, I'll go to churches, I'll go wherever it is, just to provide. See, when you do things with the intention without looking for a return, that's when you get blessed. Okay. When you do things for the intent of providing value, that's where you truly benefit from it. Okay. The other aspect of it is you were saying where we're putting all our funds. It's a lot of times we're so transfixed on working for money. Because it's been indoctrinated. You got to work for money. You got to work hard. Rather than doing what the rich do. And what do the rich do? The rich has their money working for them. You got to have to put your money to work so you could work less, so you could have more time. And time is not money. Time is life. And while I'm working this overtime and doing all this other stuff just to get that bag, what am I sacrificing as a result of that? Remind you, you're not 10. Some of y'all not 20. Some of y'all are not 30. Before you know it, you're going to be 65 years of age. You're going to work 30, 40 years of your life and then go on retirement and do what? With how much? For how long? That's the language that has to be expressed. That's the education that has to be expressed on a regular basis within our communities. And it's never, ever too late. It's never, ever too late.
And that's what is important. Like you said, you work 20, 30, 40 years for this company and then you retire. And then what do you have? You know, what are you living off of? You're living worse than you was when you was working there. It's like you do all this for what? You know,
yeah,
and it's important, man. It's definitely important. I definitely want to have more conversations like this. My podcast, basically, we've been having like local elections over here. I've been having like a lot of politicians run for certain events and seats, and I wanted to get. I couldn't wait till the election was over. To have these type of conversations, man, to educate a lot of people, including myself, on like insurance, man. Because like you say, we see insurance is like, oh, you know, you throw money in, you throw a certain amount of money into this monthly, and but we don't talk about what does it actually do for us, and how it can actually build generational wealth for us. We don't have that type of conversation about that. It's just a basic dry. Oh, you get life insurance, so you can be covered, kind of like car insurance. You know what I'm saying? You got the car insurance to take care of you when you get into a wreck or whatever. And then you got life insurance to take care of you when you die. We just get those basic, that's it. We don't go into details on what it actually can create and do for us.
Yeah.
And that's the thing with life insurance. Like life insurance it's a multifaceted tool. So we looked at it as like we as human beings, we're like a reservoir, and we can utilize different tools, be it crypto, or be it life insurance, or be it different retirement options, whatever it may be. But if we focus on utilizing ourselves as a reservoir and we're individual communities, then we can utilize these different tools to not just benefit ourselves but everyone else around us. So it's a matter of how can we do something, how can we all just like I mentioned several times, but how can all of us move forward? Because that's what it is. It's a movement, really. At the end of the day, you got to think people like Nipsey. He talked about it like he was dropping gems left and right, about investing, finance, and not just about getting the bag, but how can we maximize that and roll that over into something else better.
Yeah, he was the first person that I ever heard talk about crypto. I didn't even know what crypto was. He was talking about crypto maybe 4 years ago or something, or whatever. But
now everybody got a Robinhood account, and
yeah, man, everybody got a Robinhood account, man. I mean, I got one, so and like you said, not to keep y'all any longer, but crypto is a thing, and so I thought, I say, okay, everybody's invested in crypto. Crypto is the thing. I say, what is something that needs something that people can invest in that that's not blinded by crypto. Crypto has everybody blind, and I was thinking what can I invest in other than crypto that can be very beneficial, and I was thinking about that, and when you said something about insurance, I was like, in my head it said bingo, because that's the thing right now. People are investing into crypto and they say, oh, it's this stock, and I was like, okay, everybody's investing in that stock. Everybody is investing in Dogecoin and all that. I say, what is something that I can invest in that not too many people are talking about, but they need to talk about, that I can jump on right now?
Yeah.
And when you said as far as with the banks, who they're investing their money into, and these insurance companies and policies and all that stuff, and I was like, that's it right there.
Yeah. 1,000%, 1,000%. And I don't want to say we're just super hungry on the life insurance aspect. It is super important to have. But what's even more important is super to have balance. And that's why when I talked about the 5 to 6 accounts, you need balance. My brother, my late brother, told me a long time ago. He said. Live below your means. Live below your means, right? So you could live the life you always want to live. Each and every single person here has the ability to be financially independent based off of the decisions that you make on a daily basis. You not spending money on that extra cup of coffee is preventing you from becoming financially independent. You buying a car that is a little bit too expensive, preventing you from becoming financially independent. It just could be a matter of a couple of $100, where I could take this $100 and invest it in insurance, maybe buy some Bitcoin, maybe do some other investments. But you have to be disciplined, and you have to be savvy. You gotta be rational with yourself. Look at yourself in the mirror and say, hey, what can I do to improve myself financially and live the best life I've ever lived? That's it at the end of the day. We could all, the beautiful thing about it is we all can do it, but not all of us will. There's a lot of people on here that is hearing what I'm saying, but they're not listening. And that's two different things.
Yeah. I definitely, the light bulb went on. Y'all, I wish I can. I'm gonna go back and watch it. I always go back and watch my episodes again. But man, that light bulb went off in my head a few times, man, on the stuff that y'all were just saying, man. Man, it's a dope conversation that a lot of people need to have. And like you said, man, I'm definitely gonna hit my cousins up in a group chat and see how we can come up with a plan as far as to create like generational wealth for our family, you know.
Yeah.
And like I said, man, this is a great conversation. I'm glad that I was able to have both of y'all on, man, on a Friday. And y'all are an hour ahead. Jason, you in Brooklyn, so I guess it's what 10:30 out there, 10:26, something like that.
Just
yeah, Demareon, you as well, man. You out there in Kentucky. I appreciate y'all coming on the show, man. And what I'm gonna do is I'm just gonna repost like y'all information on like a whole nother post, like as far as y'all IG page, the we elevate financials.com. I'll be posting all that stuff, all that information, man. And like I said, man, I want to thank y'all for coming on a Friday night. I'm humbled, and you know, I usually did my shows on Friday nights because when the COVID hit, you know, a lot of people were inside, you know. We couldn't go nowhere and stuff. So Friday nights, I was like, you know, as far as something to watch, I was like, let me have a show that's, you know, that talks about mental health, financial, this and that, all type of stuff that people can, you know, pay attention to, because, you know, a lot of people were just stuck in the house on their phones and stuff. So now that the country is opening back up, you know, a lot of people want to, like, you know, yourself and Demareon, you know, Fridays are, you know, y'all are busy and y'all out the house and stuff like that. So I still appreciate y'all for coming on, man.
Thank you for having us, man. Yeah, and that's at the end of the day, I'm just figuring out how can we, kind of like what Jason said, there's going to be people that hear what we're saying, and there's going to be people that listen to what we said. So not saying this that, you know, we are the greatest people on the planet, but it's just value. It's about how can we give more, you know, than we get in return, and how can we, you know, impact someone else's life for the better. So, I mean, I think an idea that kind of came in my head was like, you know, when you were talking about getting your cousins and everything together, we could do, you know, more conversations like this and more narrow focus on different things. Like we could dedicate a conversation about Alert. We can dedicate a conversation about dynasty funds. We can dedicate a conversation about like the process of max funding and different things like that. So we really hit that on the head for all the different audiences.
Yeah, no doubt, man. Like I said, I want to thank you again. Thank you, Judy, for watching. Appreciate your comments and stuff like that. But like I want to say, man, I thank y'all again for coming on, man. I appreciate y'all. I know we went over an hour. But man, I appreciate y'all, man. I'm gonna let y'all get on out of here and enjoy the rest of y'all night, man. I thank y'all. I'm humbled y'all even came on.
Appreciate you, man.
Appreciate it so much. Thank you.
All right, man. Hey, y'all be safe out there.
You too.
Okay. So look, man, that was a very educational, informative show, man. I'm not gonna lie. I learned a lot, especially with LARPs. And I'm pretty much gonna open up one for my daughter. But if you missed the show, man, you know, you go watch it again. You can watch it on YouTube. I'll put it on Spotify, iTunes, just in case you want to listen to it on there, on jogging on your way to work and stuff like that. But I appreciate y'all for tapping in to this show. I know I was doing a lot of local politics show because a lot of local, you know, the local election was going on. And they got a mayor runoff. I think June 19th, it's a mayor runoff. So we will have a new mayor June 19th. But I appreciate everybody for liking, sharing, commenting on the show. My daughter is knocked out. She out here. She had a busy day. But yeah, man, you know what I'm saying? Two smart brothers that I had on the show. And I will be listing the information if y'all want to get in contact with them on IG, their Gmail, so you can have these type of conversations with them as far as insurance policies and what to open up, you know, college savings for your kids and just all kind of stuff they can help you with, man. So like I said, I appreciate y'all watching the show. Next week, I got a show next week. I'm it's going to be about, I'm not going to say it's going to be about mental health. It's going to be along that base. It's going to be along that base coverage, you know. I know a lot of people that's been going through some things. So hopefully next week's show can help them mentally. So I'm finna get out of here, man. I'm finna put her in the bed. I'm finna continue drinking my drink from Pastor Palmer. Adult time drinks. Y'all holler at them, man. This is a fish bowl. I think it's called Shark Tail. It's like $12. I couldn't really drink it like that on the show because, you know, these brothers was dropping a lot of gems and I needed to pay attention. So I didn't really want to drink it like that. I wasted something on the leg. So shout out to Pastor Palmer for these adult time drinks, $12. They was the sponsor of the show. Y'all go like their page. These drinks are real good, so I'm not even gonna lie. This is a great drink. So I'm finna get out of here, man. Y'all be safe. Thank you for watching the Kickback. Hold on, there's something that I want to say. Oh, also, Northside Alumni Children's Charity. I will be opening up a scholarship for, I don't know if I want to do it for LIT because LIT is Beaumont. I'm Beaumont versus everyone. So I don't know if I want to do it for LIT or I don't know if I want to do it for Lamar State College, Port Arthur, because I graduated from that college and that's a great college. I love that school. I'm not even gonna lie. I love that school more than my high school, to be honest with you. That's strange, but still. Lamar State College, Port Arthur. I don't know if I want to open up that scholarship for that school or LIT because LIT is Beaumont. So it's still going to be a tough decision. But basically what I'm doing is I'm going to open up a scholarship where, you know, I want to say two people, but, you know how it is when you apply for a scholarship when you're in college. So starting off, it's not going to be that much. I'm not giving out $1,000, you know, a semester or whatever, but just anything can help. Because I know when I was in college at one particular time, shit, I didn't care how much that scholarship was. I don't care if it was $100 or $200, $300. If they gave it to me, I wasn't doing no tripping or whatever, because that's money I could use on books or wherever it is, gas to go to school, wherever the case may be. So this scholarship that I'm opening up is gonna hopefully benefit a student per semester. So I will be dropping the link on the account, a bank account, if you want to donate, if you want to support one of these particular students that win the scholarship. I'm not going to say these kids are going to have to go through hula hoops to try to get this scholarship. Because like I say, it's not going to be a lot of money. It's not going to be $1,000. It's not going to be close to that or whatever. But, you know, maintain like a 3.0. Basically, just say what you're going to school for, what's your goals, and that's it. And then we just pick a student, you know, and, you know, they get the benefit of the scholarship. And so hopefully I could build it into something bigger where the scholarships can be more money and we can help more kids. And this is just the base right now. So next Friday, I should have the account. And like I said, my scholars, my Northside Alumni Children's Charity nonprofit is totally legit. Paperwork, totally legit. I know how some people think. They'd be like, oh, I'm not finna just donate into a bank account and not know where it's going and all that. I don't need them. I'm gonna tell you one thing. I don't need money like that. You know what I'm saying? You know what I'm saying? I'm an honest person when it comes to something like that, as far as helping people. So, like I said, if you donate and you want to be a part of, as far as presenting the scholarship to the student who we pick or who deserves it, I mean, you can. You know, I don't have no problem with that or whatever. But yeah, Christy, I was thinking like, you know, as one student at both colleges and stuff like that. Yeah, but I guess it just depends on like, as far as like the donations that we get and best believe I'm hitting up businesses in our communities that benefit from us. You know what I'm saying? That, you know, I'm not saying black or whatever, particularly black, but in our urban communities, we have certain businesses that really benefit from us. like, you know, majority of that money is coming from people that look like me and you. So if I hit up a particular company or a business and ask them for like a donation, I'm not saying they have to do it or whatever, but I would love to hear the answer as far as why they can't do it and why you're benefiting off our community like that, and you're not really to help the citizens of our community. It's gonna really say something. So, like I said, man, this is just a base of it. I get the paperwork and everything together as far as, you know, the scholarship and how you can contribute and all that stuff like that. But as far as Friday, I will have like the bank account, the Northside Alumni Children's bank account, where you could donate in it, and it will help contribute to helping somebody from LIT or somebody from Lamar State College, Port Arthur. I will hit up the school and see what hoops and hurdles I have to go through to make it official. And when it's official, then you will definitely know. And like I said, I'm going to try to make this big, man. You know what I'm saying? And try to help as many kids as we can when they go to college. All right. So enough rambling. I'm finna get out of here, man. I appreciate y'all for watching the show. Y'all be safe out there. Y'all enjoy y'all Friday. Y'all enjoy y'all Saturday. And thank you. I'm out of here. Let me put her in the bed. And let me continue sipping my Pass Palmer adult time drinks. Thank you. Appreciate it. I'm out of here. Be safe. 100.